Hello, everyone. It was a very good week overall. The market did great. We reclaimed the 200 SMA on the SPY. The DIA keeps on doing its thing well above the 200. We now can see the 100 SMA eclipsing the 150. Step one. Next would be the 50 to get above those two, and then the 50 to get above the 200. And we'll be looking in a much better shape. But that being said, I don't think the volatility is going to go anywhere anytime soon. Not really the volatility, because if you look at the VIX has fallen to that 20 level. It's actually below the 20 level, which is pretty amazing, but it's done that a couple of times this year. Really hasn't meant for much. And as you can see, it's basically range bound. So every time you're down there, you got to go back up here and so on and so forth. We'll see if that trend continues, but we're looking a lot better. I know that early on in the year, we were above the 200 SMA here in the market, but the leadership, the charts, the volume profile, look at this rally higher. Look at how volume declines. Look at this rally higher. Do you notice how we have above average volume and we're getting pocket pivot point signals? That's these little jump line that you see in this blue line. Notice how you don't see it back here at all throughout 2022, but you're starting to see them now. So probabilities are Q4 rally, Santa Claus rally is here. I went into the quarterly portfolios for the first time this year to participate in the Santa Claus rally. But that being said, I still expect a recession, a soft recession, soft landing next year, which will keep this market very, 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 very choppy. And it's been actually very difficult. We've actually had quite a few winners. And on my end, we've done very well on the end-of-day basis. However, the problem remains the same, and it's okay because of the condition that the market's in. I'm not getting any great signals in certain setups that I have used my entire career. I'm not getting any clean and simple breakouts in high quality, true market leaders, slim stocks. They're all sloppy and choppy. And while they're working, a lot of them give you that FOMO feel, like APD, for instance. Okay, check this out. Fun. But you're going to go ahead and buy this extended move? Because the last one, when it broke out above the highs, that didn't last very long. But now this one is sustaining itself. And that's the issue that we're having in this market. Now, hopefully, you'll get a pullback at some point to a logical old resistance level that will act as support, and you'll get a proper setup. But the problem continues to be that we're getting a lot of these kind of charts, and it actually started before the market uptrend began. Off the October lows, I remember wanting to get long MOD here, but I was like, I think it's a little extended. Hopefully it'll consolidate. And it just keeps running. So the whole point is a lot of winners, but the difference between me being invested in 2 to 4 stocks at 100% of my account capital on an end-of-day basis versus being invested in 30 stocks at 30% of your account capital, 1% each, is what we're seeing in the quality of the signals, the overall setups, and the market condition. And I also want to make mention, if anyone thinks that, oh, the bottom is in, I've missed the bottom, I still believe there's going to be a retest. I told everyone before 2022 even started, this would be the year for the day trader. I expect us to bottom somewhere around SPY 350. I have game plans to go back into long-term portfolios at SPY 400. I did that, SPY 380, and then I was going to do a 50% major add at any point when the SPY would close below 350. Unfortunately, that never happened. One day, the bottom, the low so far on October 13th, the intraday low was 348.11. If that would have been the close and not the bottom, the low of the day that day, if that would have been the close, the very next day, all of my long-term portfolios would have had an additional 50% adds. Instead, that didn't happen. The good news is I anticipated that, and I piecemealed into certain select long-term positions, all made available for members as soon as I entered. Slow movers, 5 to 20-year holds. It's not critical to get in right now. I got to get in right now. And then, like I said, we went into the quarterly portfolios for the Q4 rally, but I still believe we have a lot of chop. And if we have, let's pretend like we did miss the bottom. Did you miss out on the uptrend? Well, I have some good news. If this is a bottom, if the Fed starts pausing rate hikes, if we then start cutting rate hikes, I have some good news. And this is the good news. So I've switched to the telechart version 7 because I cannot go back far enough on a daily time frame to 1994. Am I saying this is 1994? No. But if I have to look at an analog situation regarding the interest rate hike cycle, this is the closest that I can find. So the market actually in 1994 to 1995, the market actually bottomed in 1994 in April. And look at what took place into the end of the year. Look at how choppy this market was, but we held the lows. The key to all of this is I know that these are not in order above, but I always track these key long-term moving averages. And I want you to notice when they're properly aligned, you can go in on dips into the overall market and buy leaders, and a lot of them have clean patterns. When you're dealing with this chop, this could get sloppy. So let's pretend like October right now is April in 1994. It's going to be sloppy, guys, but I want to show you something. Notice the moving averages. I personally call this car crash. This whenever you start seeing these moving averages start to dance around like this is just a car crash. I mean, you should look away, but it's hard. You can't look away. You got to watch it. So you can see that we start moving higher in 1995, right? So as we're moving along, all of a sudden in February, we start going. Now, do you know why in February we had this breakout move right here? The Fed went from hiking rates to pausing rates. So now they've officially paused. So right now, we're still in a rate hiking cycle. They are slowing down, but the market anticipated the low well in advance of the pause in the interest rate cycle in 1995. Now you got this price move, right? This is a key point here. I want you now to look at the moving averages. They have now all properly stacked, the 200, the 150, the 100, the 50. You've missed the bottom. Look at how much the market is up off the lows. A whole whopping 10%, which is cute because we kind of like move that in one day nowadays. It shows you how crazy the market's become. But you didn't miss the bottom. And then guess what happened as we move forward? Right here in June, right there. Guess what happened on this day right here? 7/19/1995. For the first time since 1992, the FOMC cut rates. So by the time they cut rates, they already paused. We already were through a rate hiking cycle. They just cut rates, and look at where the market is. So if you're all waiting for the Fed to cut rates, you're going to be left behind by 25%. Now, if you said to yourself, oh my God, I'm too late here, I can't chase the market up here, I want to show you why you're not too late. I am not saying that this market is going to be at like a 1995 to 2000 market. In fact, you can guarantee it is not. I just want to show you that even if you think you've missed the bottom to this point and you're too late, this point right here in April is when Mark Minervini started to get aggressive. Mark Minervini, just like me right now, small position sizes, and he's never going to hold as many stocks as me because he's the master. But that's why I have small position sizes right now, and nothing is like a main concentrated weighing in any of my portfolios. But this is when Mark Minervini got aggressive in April. Look at where we bottomed last April. One full year from the bottom, and he only now starts to get aggressive in April. Do you know what his return was in 1995? 412%. And he did not get aggressive to April. The Fed did not cut rates till June. And I want you to look at this moving average stack as we move forward. 1995, pull back, find support at the uptrending moving averages. We could break down below the moving averages in 1996, but they remain properly stacked. We're right back above them. And here we go again. I do not think that this is going to happen. I just want to show everybody that if you think that you've missed any kind of bottom, if we're still, which I believe we are, in a secular bull market, not a secular bear, this is a cyclical bear market and a secular bull market, that I believe based on demographics, which is the only thing that ever lines up with the overall market and bear markets, we're in a secular bull market into 2034, 2035. We just got to get out of this current pattern of chop that we have in the market right now. But look at how we keep going up, never closing below any of those moving averages, all of them, with volume until 1998. So did you miss the 1994 bottom by being, quote, quote, late to the game in 1995? Absolutely not. And it'll be the same way this time around, if we have bottomed. So as of right now, October is the low. I believe we have a lot of chop. When will I get extremely aggressive? Well, once again, let's look back to the 2020 bottom. This whole move higher. Do you think that you missed the bottom? Oh, you missed the bottom, you missed the bottom, you missed the bottom. And then look what happens all the way in November of 2020. How far away you are from the bottom in 2020? Did you miss the bottom? Nope. You sure didn't. So remember, if you want to know when the ideal time is to go big or go heavy, if you don't get your signals, there's certain signals, I call them grade A signals. And what's been really weird this time around is that I've gotten very few grade A signals. And in fact, I did get one recently in a speculative stock. And unfortunately, even though it was a technical quadfecta, due to the amount of long signals this week, I made a clerical decision, a clerical error, where normally I put a good to cancel buy stop above the high of the day. But whenever it does a quadfecta, makes all of my certain volume surge price characteristic scans, I go half and half. TWKS was a quadfecta name on this day. Unfortunately, I just did the buy stop limit. And guess what? This is the stock market. Guess who didn't get filled? I didn't get filled. My buy stop was at 858. My limit was at 858. They didn't fill me. And I missed out on this little 10% plus move in 3 sessions, and what would have been a 12% move in 3 sessions had I gotten at least half of it filled at market. But that signal, and what you're not looking at here, let me show you what it looks like on the other version. Okay, we're back to Telechart version 7. This would be what I call, on a standalone basis, a grade A signal. Now, is it a really, really, really great A plus signal? No, because this bar that you're looking at with that volume truncation with the middle window, the max green bop at the bottom window, if that price bar happens here or here, you have an A grade A plus signal. Here it's just a grade A signal. But that being said, on this day, it's very hard to make these 4 scans that I have. It made it. Did it? And that's what we're looking for. Another stock that made the 4 scans, but it was too thin to do size, was this one. BSRR happened to be on the same day. I also, once again, forgot to do the market order on this one, but my good to cancel buy stop limit order did get filled on this one. And since the trade idea, it is up 5%, and it's a slow mover. So they do work. But on these, in a good market, I'm pushing it, guys. I am pushing it hard. I'm pushing it heavy, even in the non-cancelim name. So I'm going to wrap this video lesson up with my focus list heading into next week. This is a very, very, very selective criteria scan. We're talking the best of the best stocks fundamentally and technically. Let's go through the list. There's only 6 names, and then we'll wrap up the video lesson. All right, guys. So this is my current list of leading stocks. I haven't updated this really. I mean, I've added a few since November 13th, but go ahead and take a look if you want to add them to your own list. These are the best of the best based on multiple technical and fundamental characteristics. And what's pretty amazing is that this scan lately hasn't been over 30 or 40 names. I've got 74 in there, but out of those 74, 6 make a very, very selective scan that I've created in MarketSmith. And if you want to know what those 6 stocks are heading into the next week, let's start reviewing them. ANET. ANET is a leader of leaders. We are starting to see the moving averages stack properly. I would love to see ANET, now that we have this pattern develop, somehow give me, see, this is the problem, guys. These are sloppy patterns to me. Are they actionable At the 21 EMA, yeah, but here's the problem. Since knowing that ANET, since I re-identifying it as the leader and it making my scan, it's never pulled back to this 21 EMA. I've had no entry. So I need a clean and simple setup or a pullback entry on ANET, but it's a leader. Keep it on your watch list. AFYA, the exact same situation. I've got now at the 21 EMA, you could get long here with the stop either here or here, depending on your risk tolerance. But this chart, once again, is too V-shaped. I would love to see AFYA clean up and get long. So ANET, AFYA, and then we're all at Big Wave Trading familiar with ENPH. We loved ENPH back in June and July before this run up into earnings. We loved it here before it failed. We loved it here. We loved it here. And we love it here. I have a position in ENPH, not only in the quarterly portfolios, but my long-term portfolios. I believe that this is the decade of solar stocks. I believe it was the last video lesson or the one before. I gave you 4 names. I am extremely bullish on them for this entire decade. Set it and forget it. Walk away. Look back 10 years from now. I guarantee you all 4 of these stocks. Well, can't guarantee it because things can change. Anything can happen. I don't know how bad the management or how good or how bad the management is. One manager might have a cocaine problem or CEO might have a cocaine problem in the future. I can't predict that, but as of right now, these are the 4 names. And if you just want to, you could probably buy and hold TAN for 10 years and you'll be good. But ENPH is a current leader. I'm looking for any and all squeeze, setup, breakouts, or 21 EMA pullbacks on this one. CPRX. This really bothers me. I did not buy this cup with handle breakout. It squatted, so it would have shaken me out of over half of it because I'm keeping extremely tight stops now. And here it is grinding higher. And once again, now that it's broken out of the cup with handle, I'm trying to get it on a 21 EMA setup. And of course, it isn't happening. But keep this one on watch. And then one that I personally love, CLFD. But here we go again with these sloppy patterns. But it's kind of a double bottom. Hopefully it can form a handle, breakout, CLFD, top of the list, and then GMAB. GMAB did break out of this. So you see here how if we go across these highs, we basically have highs here, 2, 3, 4, and then we break out. Awesome. Great breakout buy on GMAB, but once again, sloppy patterns. I'm looking for that tight and clean pattern and or the 21 EMA retest. It didn't break out. And so that 21 EMA retest came before the breakout. Now that it's broken out, I need the 21 EMA retest to get long. Hasn't happened. We'll continue to keep it on watch. But those are the 6 behemoths, the 6 leaders. Now I'm going to go ahead and post some of our current winners on social media today and tomorrow. Be sure to check them out just so you can see what you guys are missing out by not being a part of the team. Anyway, if you learned something in this video lesson, please give me a like, subscribe, thumbs up. Comments are always the best. And if you really enjoyed it, please reshare it. All right, everyone. Have a wonderful rest of your weekend. I'll see the team on Monday in the chat room.